Hello and welcome to Business Lunch. I'm Nisha Podar and with me is my co-anchor Pavitra Parekh, and we all are celebrating the season of festivities, and from the entire team of Business Lunch, very, very warm greetings for all the festival season which is now starting from today to all the viewers of CNBC-TV18. Let's take a look at the market, the last day before Diwali at the trading session, and yes, market is cheering again. In fact, 17,650 levels conquered by Nifty 50 at the moment, 0.5% up in trade. It opened in the green and sustained the momentum as we speak. Now, Bank Nifty, banks are the ones which are really taking the charge, 2.2% up in trade at the moment. But the mid caps are the underperformers, down at the moment by 0.23%. And the mid cap universe being less of a performer and underperforming is weighing on the overall market sentiment when it comes to the market breadth as well as the strength. So advanced decline ratio is pretty much neck and neck as we speak. But two stocks on my radar on fire is Axis Bank. Take a look at that particular counter, almost 8.5% up in trade. Kotak Mahindra Bank is also gaining a lot of ground. ICICI Bank also not too far away. Pavitra.
Hi Nisha, good afternoon. So first off to you and to all of our viewers, season's greetings. A very happy Dhanteras, Diwali, and we hope that you have the most prosperous and happy festive season. So with that said, you know, it's been pretty good for our markets as well, right? We've been talking about this. For the year gone by, it's a good time to reflect, right? So for the year gone by, our market has been a stark outperformer. So hopefully that run can continue. These are just a few rates to show you the kind of resilience that our market has shown. A lot of this has come through from the PSU bank. So today, of course, it's surging. If you take a look at the 1 week move for the PSU Bank Index, it's up 12%. In the year, it's up around 30%. That is the kind of solid growth that we've seen in that space. On the downside, you're seeing a little bit of pressure on the metals pack today. And also Reliance is, of course, a little bit subdued ahead of its results. We're not expecting a very good showing from Reliance, but let's see. Right now, it's around 0.6% lower. It has been doing well in the past couple of days as well. But that's what's happening with the market action. Let's start off with Axis Bank. Like Nisha was pointing out, it was a strong showing. Net interest margin and net interest income all came in at a 26-quarter high. So Abhishek is here with the fine print and to also tell us what brokerages are making of this solid set. Abhishek.
Well, for Axis Bank, you know, it's fired on all cylinders or across metrics if you take a look. So net interest margin is at 26-quarter high of about 3.96%. The NII growth on a sequential basis came in at close to 10.5%, which is the best in 26 quarters, and around 31.1% on a YY basis, which is the best in last 25 quarters. This has helped the return ratios with ROA of 1.8% and ROE of 18.5%, both being one of the best in last 7 years. So asset quality has been pretty good. The gross NPA ratio has declined to 2.5%. So X of Q2 FY21, which was the RBI dispensation quarter, this looks like one of the best in last 25 quarters. And net NPA ratio is at just 0.51%, which is the best in last 28 quarters. So CASA ratio, or the low-cost deposit ratio, has now crossed the 46% level, which is one of the best that you are seeing in last 16 quarters of 4 years. So cost to income ratio or operating efficiency, that's also one of the best in last 5 quarters. Annualized slippage ratio of just 1.83% is perhaps the lowest that you are seeing in last 8 quarters. Restructured book has also declined. Watch list has also reduced, which means that the stress in the balance sheet is actually reducing. The only flip side in the result was the deposit growth, which was around 10.1% YOY, one of the lowest deposit growth that you are seeing in last 6 quarters. So PNL, they have beaten our poll both in terms of NII and PAT. Brokerages remain bullish on the stock. They say that you know, this is a time when the valuations are on the lower side and the fundamentals now augur for a re-rating of the bank going ahead. They have raised estimates for FY23 anywhere between 8% to 14%, and for FY24 and 25 anywhere between 1% to 11%. So across brokerages, the new target price range is around 990 rupees on the low side and as high as 1,150 per share. Back to you.
All right. Thank you so much, Abhishek, for giving us an exhaustive analysis on Axis Bank. The street seems to like the performance and the outlook given. Let's focus on Asian Paints. That has also posted its second quarter numbers, and it came in below the street estimates. That's why the stock is under pressure today. With volumes as well as growth for this particular company, as well as the margins, all for failing to really meet the street expectations. So earlier today, we got in touch with the management, Amit Singhal, MD and CEO of Asian Paints, who gave his outlook on the demand and margins going forward and the guidance for the performance. Let's listen in.
A good monsoon, which has happened, relatively good monsoon, is a very big kickoff in the consumer sentiment overall in the rural markets. And I think that will definitely give us a higher growth from a rural point of view to that extent, which also has been incidentally the trend in Q2, where the rural markets have done much better than the metro and the T1 to tier cities. We feel that this is a transitional part happening given the larger impact of inflation which is coming in. The markets are now, raw material is cooling off very strongly. We see definitely a deflation of about at least minimum about 5 to 6% happening in the coming quarter, which we see in all the key raw materials of the paint industry overall to that extent. And given the fact that today, I think the maximum brunt of the inflation we have taken in Q2, and we are done with that kind of an inventory which was there in our system, I see definitely going forward that there will be definitely a push up in terms of the overall gross margins, more towards possibly to a 37, 38 kind of a percentage point, and definitely an improvement in terms of the PBTIT margins going towards the band which we spoke of in Q3. But I see that possibly if the inflation kind of remains flat and the deflationary trend continues, I think by Q4 definitely we will be back in terms of the bands which we have been speaking of definitely.
All right, that is the word coming in from Asian Paints. It has been a disappointing set of earnings, but they're saying demand is looking good and they could move back to the gross margin rate of 37 to 38%. With that, let's move on and talk about market heavyweight Reliance, which is due to release its second quarter numbers later today. So Sonia standing by with all of the key expectations. Sonia.
Well, it's expected to be a weak showing from Reliance in the quarter gone by. In fact, it's reflected in the stock as well. Take a look at the stock movement. It's down 13% from the highs that we saw in the month of April. That's primarily because of the weakness in the oil to chemical segment. And that's the key expectation this time around. The oil to chemical segment will be under quite a bit of pressure, followed by a big decline in the refining margins and sustained weakness for the petchem business. But all of this will be compensated by strong growth in the consumer-facing businesses, both in retail as well as in Geo. Let me take you through the key numbers this time around. Now, on a sequential basis, although the revenues will rise by about 5% to 2.3 lakh crores, the problem really arises in the EBITDA performance. A 14% downtick on a quarter-on-quarter basis is what we're expecting, while the margins as well will fall to 14% versus 17.5% last quarter, and the profits could see a dip of around 12.5% as well. That's primarily because of the lower oil to chemicals segment performance this time around. There's been a sharp decline in refining margins. In fact, Nomura put out a note where they say that the gross refining margins could fall to $11 a barrel compared to $18 in Q1 of FY23 as well as $12.8 in Q4 of FY22. Now, the windfall fuel export tax and lower product cracks will also be hitting the earnings this time around. And in the petchem segment, as we know, there's been weak demand since the start of the year, and that has hit the earnings performance. However, on the flip side, the consumer-facing businesses have done quite well. In fact, the Geo business will see an improvement in its revenues as well as in its EBITDA performance. The revenue growth will be about 22.5% on a year-on-year basis, and this is the third consecutive quarter that they're sustaining revenue growth above 20% year-on-year. Not just that, the EBITDA will rise quarter-on-quarter as well, and there is an expectation that the average revenue per user for Geo will improve to around 180 rupees versus 175.7 same time last quarter. In fact, the retail business as well has been on a very strong footing, and now together the share of the consumer business in the segment EBITDA has risen to 49%. So to summarize it, oil to chemicals will be weak, but the consumer facing businesses will do well this time.
All right, Sonia, thanks so much for getting us all those details. And of course, that result is very much awaited later this evening. Stock under pressure.
Hey guys, welcome back. You're still tuned into Business Lunch. Now, the insurance regulator, the IRDAI, has cast a shadow over the Axis Bank and Max Life deal. So Yash is joining us with some details. Yash, you've been tracking this story closely. Looks like brokerages have also taken note of this. So take us through all of those notes.
Well, that's correct, Pavitra. So, of course, since the last few days, we've been reporting on the regulatory shadow over Axis Bank Max Life transaction, whereby Axis Bank, as the second part of the transaction, is yet to acquire about 7% stake in Max Life Insurance. Some of the brokerages post earnings from Max Financial Services have also taken note of this regulatory uncertainty. What Kotak Institutional Equities says is that they find some uncertainty for the event of a 80-20 shareholding in Max Life Insurance between Max Financial Services and Axis Bank. They assign a 50% probability to the adverse scenario on the regulatory side as far as this transaction is concerned. MK also has comments to offer on this particular transaction. They say that they will watch out for any tangible progress towards IRDAI approving Max Financial Services, selling its 7% stake in Max Life to Axis Bank, and this particular approval will be a key re-rating point for the stock of Max Financial Services. Finally, CLSA has also written on the regulatory front. They say that the regulatory fine on Max Life for the share sale to Axis Bank looks manageable, but they will watch out for incremental approvals from the insurance regulator on the reverse merger process between Max Financial Services and Max Life Insurance.
All right, important story there. Thanks so much, Yash, for all those important details. Now, moving on then, the AMFI semi-annual rejig is set to be unveiled in the first week of January. In fact, our colleague Vivek Iyer is standing by with what could be the possible changes expected. Vivek, tell us all.
Well, good afternoon. So what we are tracking right now is the list of potential changes that could be seen as far as the market capitalization is concerned. Now, remember, AMFI does this twice a year. So the next recategorization of companies into depending on their market capitalization will happen in January 2023. So now, this particular list will be valid from February 2023 to July 2023. And as per Nuvama alternative and quantitative research, analysts have already started penciling in the likely changes that are going to happen. And remember, this assumes importance in the fact that, some of the fund managers would be required to make changes in case they are tracking the index closely. So now potential migrants from the mid-cap to the large-cap space include Varun Beverages, ABB India, Tata Elxsi, Page Industries. And when you're talking about potential migrants from the small-cap to the mid-cap space, you're looking at Timken India, Metro Brands, Blue Dart, as well as Fine Organics. On the other hand, some of the downgrades, if you could call it, migrants from the large-cap to the small-cap or to the mid-cap space would be Piramal Enterprises on the back of the corporate actions that's happened, Gland Pharma, Emphasis, Muthoot Finance, as well as Bandhan Bank. And also, if you're talking about migrants from the mid-cap to the small-cap space, it's Tanla Platforms, Chambal Fertilizers, Nalco, IEX, New India Assurance. A lot of these stocks have underperformed, which is why, their market capitalization has also dropped. Some of the recent listings that are likely to make an entrance as far as the small-cap space is concerned include Dreamfolks, EMIL, Harsha Engineers, Sirma, LGS Techno, Traction Technologies, as well as Tamil Nadu Mercantile Bank. Closer to the date, depending on the market moves, there could be some changes on these potential migrants.
Welcome back. You're watching Business Lunch. Let's take a quick look at the market at this point. Yes, lost some ground, but not much when it comes to Nifty 50. In fact, Bank Nifty is the one which has also lost some bit of gains in the last few minutes of trade, and mid-cap remains under pressure. UPL has been on my radar after the good run-up that it had seen yesterday and today also. There is some profit booking from the top at UPL. Adani Ports, Adani Enterprises have hit another new low for the day when we look at those two counters, and also Reliance Industries under pressure as well as Bajaj Twins under pressure. So there have been some profit booking in the last few minutes of trade. Shifting focus to some international news flow then, and this is the news coming in from Britain, where Liz Truss has become the shortest serving Prime Minister as she resigned after 44 days of service on that post. Now, dramatic set of events unfolding after Truss' resignation, and few candidates in line to take over Truss as the Prime Minister there in the UK. Liz Truss yesterday in her address has said that the leadership race will end with a new Prime Minister in place by the end of the week. And also amongst the candidates, remember, garnering early support is the ex-Prime Minister Boris Johnson. Among others, of course, is India originated Rishi Sunak, who stood in the same race as Truss, remember, and also House of Commons leader Penny Mordaunt is amongst the few names that are being considered for this post.
All right, that is the wild political situation playing out in the UK. We're going to keep bringing you updates on that front. But moving on, an important cue that investors will be tracking over this weekend will be the leadership reshuffle, continuity versus change of personnel in Chinese Premier Xi Jinping's inner circle. So expectations are that President Xi will take over again as Communist Party Congress chief. Now, CNBC's Sam Vadas joins us to put all of this into perspective and explain it to us. Sam.
All eyes are, of course, fixated on the number 2, of course, because we have had an indication from Premier Li Keqiang that he will be stepping down as the Premier. And so we can read the tea leaves as much as we like in terms of who might be next, but we, of course, don't know. What we do know is that there are a couple of criteria for becoming, of course, the next Premier over in China. One is experience, and one is, of course, the age limit, because there is an unofficial retirement age in China, 7 up, 8 down, 67 you can be promoted, 68 you will need to step down. And so, as you say, Jeff, very important to watch in terms of whether there'll be any sort of concessions made by President Xi Jinping in terms of the level of loyalty and support that he has around him moving forward. And what we mean by these concessions is these factions within the Communist Party, because you've got Wang Yang and Li Qiang, for instance, or I should say Hu Chunhua and Wang Yang. These guys are actually part of the Communist Youth League, which peaked under Hu Jintao. But of course, they have still shown their loyalty to President Xi Jinping. Of course, Wang Yang has been in charge of Xinjiang and Tibet, so that would be very telling of course, his policies moving forward. Hu Chunhua, on the other hand, has also played a very important role in that poverty elimination campaign. So these are 2 guys to watch. The guy in the end, Li Qiang, is also one to watch. Of course, he is known as a very loyal ally to President Xi Jinping. He is the chief over in Shanghai. There has been a lot of talk in the market as to whether he perhaps blew his chances over the lockdown and the handling of that earlier this year. But these are certainly the ones to watch in terms of the next Premier. But of course, we will be watching people stepping down perhaps as well because of that unofficial age limit that I was talking about. And of course, here you have Liu He, who's played a very big role, of course, in those negotiations with the US over the trade war, etc. You've also got Yang Jiechi, who's also been very pivotal in terms of China's foreign policy. And as I said, Li Keqiang stepping down as Premier. What will be interesting is to see whether he, of course, stays in politics or, of course, if he stays in the standing committee. But I think what the theme really has been in this party congress so far is a signal that we are going to see continuity, particularly when it comes to the position around zero COVID, the position on Taiwan, and also around that common prosperity theme, which of course investors are watching very closely because that has underpinned a lot of the volatility we've seen in the markets over the last 2 years.
All right, so that was all about the reshuffle at the top brass in China. Back home then, we are going to start a new Samvat for trading very soon after Diwali, and earlier today we caught up with Sandeep Bhatia, who's the head of Equity India and country head India at Macquarie Group, and to understand the fundamentals of the markets according to him, and also the sectoral picks and the outlook for the next year. Listen in.
The only thing that I'll look out for are 2 factors. One, where the forex reserves are heading. If we see any sharp declines, especially around from $530 billion of forex reserves that we have now to, let's say, 450, then that's clearly a cause for worry for the rupee. And the second issue is how long the rate rises in the US will continue. Currently, we expect the rate rise cycle to go well into the first half of next year. But if this continues for all of 2023, if inflation becomes very persistent, India will definitely have an impact. But right now, in the Diwali season, enjoy it and take a correction. If there's any correction, use it to buy. There's one interesting idea that we have been pushing, and let me tell you, we are getting a lot of pushback, and that is to buy IT. I think IT has underperformed. It is like ITC. like ITC had 2.5 years of such bad news. And, despite the fact that it's a very solid company, cash generating, it was ignored by the markets because the whole flavor was ESG. I think the IT sector is in that zone. And I don't expect any quick returns in the next 6 to 9 months for the IT sector. But for long-term investors, these kind of declines and these valuations, if you have a 2+ year time frame, at least a 2.5 to 3 year time frame, the next 6 months will be a good time to buy IT. And there, stick to the large cap stocks, whether it's TCS, Infosys, HCL Tech. I think State Bank of India is a preferred choice if you see the private sector banks. The public sector banks have cleaned up the act. We will go through a capex cycle. The only thing that I'm worried about is if there are group-wise concentrated exposures that these public sector banks have ended up taking the last couple of months. And that is something that we are not very clear about today. And therefore, the preference will be to weigh the portfolio in the banking sector. The banking piece in the portfolio should still be 80% weighed in favor of private banks. And the only good public sector bank, I think, would be State Bank of India.
All right, that is the word coming in on the markets. With that, we're going to wind down on this edition of Business Lunch. The market is holding up with a 75-point gain, so looking quite good over there. The banks are just surging. It's an over 2% gain right now, but the mid-cap index is a little bit in the red right now. But with that, we're going to wind down. Thanks a lot for tuning in from the entire team, and stay tuned. A very special conversation with the country's top fund managers is coming up for you after this short break. Stay tuned for MF Cafe.